All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Monday, everybody. I hope all you guys had an excellent Father's Day over the weekend. Today is June 16th, 2025. And the top story this morning, in case you've been hiding under a rock for the last few days, is obviously the expanding, intensifying, escalating conflict between Israel and Iran. It was firing off pretty much all weekend, nonstop. So the real takeaway this morning, and I was very surprised to see this last night when the future started trading, is that the market seems to not care. We had a pretty big sell-off on Friday on this violence that had popped up in the Middle East. Some of it expected, some of it not. It happened a little sooner, I think, than a lot of people thought was going to happen. But the market sold off pretty hard on Friday. We saw oil rally pretty hard on Friday, but now that is reversing. Stocks are up. We got oil is down this morning. So what's going on here? You've got some intense airstrikes have been happening over the weekend. The Israeli Air Force is operating with pretty much impunity over Iranian airspace. Iranian anti-air defenses have put up a pretty pathetic fight. Now, largely, most of them were destroyed by not stealth drones. What should I say? Covert drone strikes, drones that popped up in the middle of the country out of nowhere and took out the Iranian air defenses before the war pretty much even started. Now, at this point, the Iranians are relegated to old flak anti-aircraft artillery batteries, basically spray and pray up into the air and hope you hit something. Against fourth and fifth generation fighters, that's no contest. Now, you've also got the Israelis are carrying out targeted assassinations with dramatic effect against high-level Iranian government and military officials, as well as nuclear scientists. There was things like multiple simultaneous car bombs detonated yesterday at one point targeting Iranian nuclear scientists. So the Israelis, once again, have pulled off an intelligence coup in this conflict. Now, that being said, this is not all a one-sided conflict. The Iranians have been counterattacking with intense long-range ballistic missile barrages. And although many are being intercepted by Israeli air defenses, a lot of them are getting through. There is plenty of video circulating around on Twitter of missile strikes landing in population centers all over Israel. So it's not like Israel is just carrying out a one-sided fight here. There are casualties on both sides. At this point, this has become a guerrilla war with ballistic missiles. You've got the Israeli Air Force hunting down these mobile launchers. The Iranians are trying to overwhelm the Israelis with these missile attacks. The Israelis have a limited number of interceptor missiles they can use to intercept it. So at this point, they're kind of settling in for this long, drawn-out campaign. Yet the market is saying this is going to be over soon. This morning, you've got stocks are up. You've got oil is down. You've got Bitcoin is up. Gold is down. The market is risk on. What the hell, right? You're probably sitting here saying, guys, what is going on? Why is this market risk on? Well, for now, it's because the Strait of Hormuz is not in play. That's why. That's ultimately what this comes down to. The Strait of Hormuz, that 21-mile wide section of land or water where 20% of world's oil flows through, right now is not affected. The oil is still flowing, and that's why the market doesn't care. Now, there have been some attacks targeted at energy infrastructure. You saw oil refineries in Haifa, Israel, were hit by the Iranian missiles. We saw the South Pars gas field was hit over the weekend by the Israeli Air Force. So they are targeting some energy infrastructure, but it's mostly domestic energy infrastructure on both sides. Exports are not really being affected. And it looks like the market is betting that's going to continue. Now, there is one very important little speck of land in the middle of the Persian Gulf that if that were to get hit, if anything were to happen there, that will change on a dime. You better believe all of a sudden that those calls for $100 oil will be back on the table. We'll talk about what that is and why that's so important here. But for now, the Iranians look like they will not be closing the Strait of Hormuz yet, with an asterisk that could change at any moment. Also going on this morning, we've got President Trump has approved the merger of U.S. Steel with Japanese firm Nippon. That's an interesting one. Both Trump and Harris campaigned against that merger, and maybe it was Biden. I don't know if Harris ever specifically campaigned against it, but both parties campaigned against that merger, saying domestic steel production was too important. We need to protect that industry. Well, Trump has signed off on that merger this morning with one little catch, one little rider attached to that deal. It's kind of interesting, kind of not. Parts of this give me the heebie-jeebies. We'll talk a little bit about that. We've got the EU appears to be prepared to accept 10% tariffs by the United States. Some possible movement in the trade war. Oh, yeah, that other big geopolitical conflict that the market is largely ignoring, that one still going on as well. It looks like the EU is saying, all right, U.S., knock your tariffs down to 10%. We might even give you some lower tariffs on your autos if you do that. Unclear whether or not the U.S. is happy with this proposal. We've got drone maker Aero Group, ticker AIRO. That is the latest IPO to rocket more than 100% in its first day of trading. Go figure, you've got a military drone maker going public within 24 hours of a large drone attack that kicks off a regional war in the Middle East. Talk about pretty good timing for that company. We've had a couple of IPOs now have really popped significantly on their first few days, and this drone maker is the latest. We've got Google this morning is out. They are cutting ties with Scale AI. We talked about Scale AI late last week. Scale AI is the big data labeling artificial intelligence firm. Well, Meta, Facebook parent company, just took out a 49% stake in Scale AI. And all of a sudden, all of Scale's biggest clients are cutting ties with the company. They don't want their trade secrets being handed off to Meta. You've got Google has officially done it. Twitter and Microsoft are supposedly, XAI, not Twitter. Sorry, Elon. They're supposedly next to cut ties with Scale AI. So Google was their biggest customer. That's not an insignificant thing for Scale, although I guess they're thinking they'll get so much business from Facebook that it won't matter. And last but not least, we've got the Trump Organization is in the news this morning. President Trump's business empire, they're announcing a new $499 smartphone. Trump Mobile is now a thing. And I have one question. I don't want to hear anything about this phone until I get this question answered. Stick around to the end of the show to hear about that one. There's a lot going on this morning in the world once again, guys. But for now, why don't we shrink my big melon of a head and let's see what's happening in markets. And this is when I say, please hit that like button. And if you're new here, hit that subscribe button. Come on back tomorrow because we do this every morning so you can come have your coffee with the melon heads as we go through markets. And look, we got a lot of green here. In these markets, the S&P 500 up 38 points, 0.64% in the black, despite a major escalating war in the Middle East. Nothing stops this train, as Lynn Alden would say. Stocks up and to the right once again. We've got the Dow higher by 219 points, 0.5% higher. And the NASDAQ is higher, leading the way by 174 points, 0.8% higher for the NASDAQ this morning. Risk on, baby. Look at that. Meanwhile, the dollar is weakening once again. Pay attention to this one, guys. I'm not sure what happened. Was this about 8:45? We had something in the last 20 minutes or so. Possibly that New York Fed manufacturing index came in pretty negative. Maybe that's weakening the dollar a little bit this morning. But we're at 97.85, lower by another 33 basis points. The dollar continues to weaken here. And we have got higher yields. That's lower bond prices this morning, albeit ever so slightly. The bond market, kind of quiet here. We've got the 30-year Treasury, 4.927%. That yield is up by 1 point and change. The 10 years at 4.436, also up by a point and change. The 2 years at 3.964, that's up by 0.5 point. And the 1 month is up by 0.5 point as well at 4.196. A whole lot of nothing going on in the bond market. We got stocks are up. We got the dollar is down. Meanwhile, in commodities, look at this. Gold is down. War in the Middle East, and gold is red. I tell you, the market is really shrugging this one off. I'm not sure if that's right or wrong. I'm just very surprised to see that happening here. Gold, though, still above $3,400. Spot gold at $34.15. That's down by $17 or 0.5%. Meanwhile, my favorite of the shiny silver is actually up a little bit here, 7.5 cents to the upside, or 0.2% higher, with spot silver trading at $36.38. I like the shiny. We've got copper is down by a fraction of 1% here. Platinum is spiking again this morning, 4% higher to $1,260 an ounce for July platinum futures. Palladium, meanwhile, is up by 1.2%. And look at oil. I mean, we'll look at the oil chart in a minute, but 1% lower. Oil's off by 77 cents after the weekend we just had. I mean, hundreds, possibly thousands of missiles crisscrossing in the sky over Iran and Israel, targeting some energy infrastructure, and oil is red. That is quite shocking this morning. Although I would add, oil is still higher than it was when the conflict began. We were in the high 60s. All that being said, oil is remarkably low here, all things considered. Now, I saw this one in Market Watch this morning. This is pretty interesting. This story actually came out over the weekend. Gold, not the dollar or treasuries, is the new risk-free asset as Israel-Iran conflict rattles investors. And I noticed this on Friday. I was remarking about this, how we were seeing some very unusual, possibly that sell America trade creeping back into markets, although gold was reacting pretty strongly on Friday. Gold prices settled at a record high on Friday as Iran launched retaliatory missile strikes against Israel less than 24 hours after a widespread Israeli attack against Tehran's nuclear site. Gold is the new risk-free asset in people's minds, said Jord Cantrambone, head of Fixed Income Americas at DWS, in an interview, adding that right now 10-year and 30-year Treasury securities clearly were not favored as safety plays. And I remarked on Friday how important that is, that long-duration U.S. Treasuries are no longer being viewed as a safe haven. That should be rocket fuel for gold. We saw that on Friday. That's a lesson learned since extreme market tumult erupted about 2 months ago after President Trump shocked markets on April 2nd with his widespread Liberation Day tariffs that were far higher than anticipated. Until proven otherwise, gold is the new alternative risk-free asset. Gold, the U.S. dollar, and Treasury securities have all long been staples that investors flock to for safety during times of rising geopolitical tensions or market stress. That was until this year. Since April's tariff tumult, fears of a lasting sell America trade have loomed over global markets, with the U.S. dollar index up on Friday, but still 9.5% lower on the year so far. It's down again this morning. Meanwhile, the most active contract for gold futures settled at a record on Friday, 34.52 cents. Its 24th all-time high this year, according to Dow market data. Working against treasuries has been a focus on the large U.S. government debt load, as well as recent fiscal deficit projections under the Republican tax and spending bill that's now in the hands of the Senate. And that last paragraph, that last sentence there is so important. It is the declining fiscal situation in Washington, D.C., combined with the tariff story, obviously, that is causing this sell America trade. It's the reason why long-duration U.S. treasuries are not functioning as a safe haven right now. And again, that is very big for gold. The only way the U.S. government is really going to be able to operate here is with negative real yields. If they somehow, through the Fed or otherwise through buybacks, suppress interest rates on the long end of the curve such that they don't keep up with inflation, that way they can just basically inflate away the U.S. government's debt. In other words, monetary repression or fiscal repression. And that means you better own some gold. So Market Watch is correctly calling that one out this morning. Now, also going on this morning, we've got Bitcoin is higher, $106,700 as priced on Coinbase. That's up by about $1,100 from yesterday. Just another sign here that the market is risk on this morning. I saw another headline that said Michael Saylor and MicroStrategy bought more Bitcoin last week. Not surprising. Saylor's infinite money glitch continues to work until it doesn't. Typical disclaimer, guys. Crypto winter is on the horizon. Be careful on leverage, as I say every morning. But let's talk a little bit more about this conflict in the Middle East and why the markets are so optimistic this morning. And I think this story right here from last night, or at least this was on Friday, but this is really the prevailing wisdom in Wall Street right now. Why Iran won't block the Hormuz Strait oil artery even as war with Israel looms. Now, again, this is pretty optimistic for right now, but so far this has been the case. As tensions surge following Israeli strikes on Iran, fears have resurfaced that Tehran could retaliate by targeting one of the world's most vital oil arteries, the Strait of Hormuz. The Strait of Hormuz, which connects the Persian Gulf to the Arabian Sea, sees roughly 20 million barrels per day of oil and oil products pass through, accounting for nearly 1/5 of global oil shipments. Any move to block it would ripple through energy markets. However, market watchers believe a full-scale disruption of global oil flows by closing the waterways is unlikely and might even be physically impossible. There really is no net benefit that comes with impeding the passage of oil through the Strait of Hormuz, especially given how Iranian oil infrastructure has not been directly targeted, said Ellen Wald, president of Transversal Consulting. She added that any such action would likely trigger further retaliation. So that's important right there. They're saying the reason why they think the Strait of Hormuz is not going to get blocked is because the Iranian oil infrastructure hasn't been targeted. And so the Iranian oil still needs the strait to get out into the ocean and to be sold to mostly China. She also warned that any major spike in oil prices caused by a closure could draw backlash from Iran's largest oil customer, China. China does not want the flow of oil out of the Persian Gulf to be disrupted in any way, and China does not want the price of oil to rise, so they're going to bring the full weight of their economic power to bear on Iran. China is the #1 importer of Iranian oil, reportedly accounting for over 3/4 of its oil exports. The world's second largest economy is also Iran's largest trade partner. Their friends will suffer more than their enemies, so it's very hard to see that happening, said Anas Al-Hajj, managing partner at Energy Outlook Advisors, adding that disrupting the channel could be more of a bane than a boon for Tehran, given how most of Iran's daily consumption of goods comes via that route. So they're saying right now, shutting down the Strait of Hormuz would hurt Iran as much as it would hurt anybody. It would hurt the Chinese a lot. It would really hurt the Europeans. It would hurt the United States a little bit, but not that much. And it would help the Russians. So it's not really so obvious right now that the Iranians would shut down the strait. But there is still some worry here. We've got this one this morning. UK MTO warns of rising electronic interference in the Gulf and the Strait of Hormuz. The United Kingdom Maritime Trade Operations said on Monday it had received multiple reports of increasing electronic interference in the waters of the Gulf and the Strait of Hormuz. It added that the interference is significantly impacting vessels' positional reporting through automated systems. That's not surprising. A lot of the munitions the Israelis are using are GPS guided, and so the Iranians are using electronic warfare to try to scramble GPS signals, and that is affecting maritime traffic. I don't know that that's necessarily a signal that they're shutting down the strait as much as the knock-on effects of electronic warfare elsewhere. But that being said, energy infrastructure has been targeted in this war. In particular, this gas field that was hit yesterday. Iran conflict ensnares energy as Israel hits giant gas field. The unfolding Middle East crisis extended to Iran's energy infrastructure as Israel launched an attack on a giant gas field in the Persian Gulf, threatening further turmoil for markets. Israel's strike on Saturday triggered a powerful explosion and fire at a natural gas processing facility linked to Iran's giant South Pars field. The hit on the onshore Phase 14 processing plant forced the shutdown of a production platform at the field, according to a report from the semi-official Tasnim news agency. The targeting of energy assets represents a new front in the conflict, which erupted on Friday when Israel launched a wave of attacks directed at the Islamic Republic's nuclear program. While the damage to the gas facility may be confined to Iran's domestic energy system, the escalation may nonetheless provoke further swings in oil futures when trading resumes after the weekend. Of course, that did not happen. The oil futures largely disregarded this attack on the South Pars gas field, as well as the attacks on the Haifa oil refineries in Israel. Now, oil erases gains with Iran-Israel attacks sparing flows so far. Once again, Bloomberg saying the same thing. It's because the strait hasn't been shut down that oil doesn't care here. Oil erased another large increase, with traders monitoring continued attacks between Iran and Israel that for now have spared critical export infrastructure. Brent traded down as much as 1% after leaping higher at the open. It was a second frenetic day of trading since attacks began on Friday, when crude gained more than 7% and record volumes of futures and options change hands. Oil markets remain on edge after Israel launched an attack on the South Pars gas field, which we were just talking about, forcing the halt of production platform following strikes on Iran's nuclear sites and military leadership last week. However, so far, critical crude oil exporting infrastructure has been spared, and there's been no blockage of the vital Strait of Hormuz. That critical crude oil export infrastructure. Put a pin in that. We'll be right back. While an attack on Iran's gas production is a concern, the biggest fear for the oil market centers on Hormuz. Middle East producers ship about a fifth of the world's daily output through the narrow waterway, and prices could soar if Tehran attempts to disrupt shipments through the route. And there is one reason why Tehran has still not done that besides Chinese geopolitical pressure, and that's because Iranian oil needs the strait as well. And this little speck of dirt in the middle of the Persian Gulf is why Iran still needs the Strait of Hormuz. What you're looking at here is Karg Island. This is an island off the coast of Iran, and 90% of Iran's oil exports are loaded onto ships at this one little island terminal. This thing is a sitting duck. The Israelis could destroy this island's infrastructure at any moment, and they have chosen not to so far. Now, the reason why the Israelis have chosen not to, in my opinion, is probably because of pressure from the United States in order to not disrupt this exports. Because if these exports get disrupted, if the Israelis do hit this, then there's no reason for the Iranians to leave the Strait of Hormuz open because their oil wouldn't be able to get out. And so the biggest reason the Iranians have to leave things open is because this island still hasn't been hit. So this is arguably the single most important piece of real estate in the world right now. If this little patch of dirt gets hit by Israeli warplanes or Israeli missiles or submarines or the Navy, then the most likely response by the Iranians would be to shut down the Strait of Hormuz, but that has not happened yet. So the oil continues to be loaded on the tankers here, bound largely for China. If that changes, then all of this optimism in the market right now goes away. So keep your eye on Karg Island. But for now, guys, look at oil. I mean, just totally shrugging this off. Oil is actually lower right now than it was on Liberation Day. We had quite a spike on Friday. You see this big candle here. Yeah, we had a spike, but then we sold off right away. Big wick at the top of that candle. Now here we are. I mean, we're almost back to where prices were trading on Thursday here. We're only about $2 or about $1.60 higher than we were on Thursday night here when this war broke out. So for now, the market is really just completely shrugging off this attack. Now, we got a couple of other big stories going on this morning. U.S. Steel shares rally as Trump approves Nippon takeover with unique government golden share. And you just got to love that Trump gold branding. It shows up everywhere, including with the government stake in this new U.S. Steel Nippon merger. U.S. Steel shares jumped on Monday after President Trump approved its controversial merger with Japan's Nippon Steel. U.S. Steel shares were up about 5% in pre-market trading. Trump issued an executive order on Friday that allowed U.S. Steel and Nippon to finalize their merger, so long as they signed a national security agreement with the U.S. government. The company said they signed the agreement with the government, completing the final hurdle for the deal. U.S. Steel said Friday that the national security agreement includes a golden share for the U.S. government without specifying what powers the government would wield in this share. Commerce Secretary Howard Lutnick detailed the rights that the U.S. government has with its golden share in a social media post Saturday. Lutnick said the share gives the U.S. president veto power over any decision to relocate U.S. Steel's headquarters, move the company outside the U.S., rename U.S. Steel, or transfer production or jobs outside the U.S., or close or idle any plants before certain timeframes. So they're letting this merger happen, but they're giving the U.S. government the ability to basically veto anything the company decides to do in order to protect domestic steel manufacturing. And for now, shareholders love it. U.S. Steel up by 5.1% ahead of the opening bell, trading at $54.78. The fact that the U.S. government is going to be making decisions in the boardroom of a steel company, I'm not really sure I like that idea. Then again, I don't really like the idea of one of the last remaining U.S. steel producers being sold to a Japanese firm either. So there's not a lot to dislike at all about this deal. Manufacturing steel remains a critical national security weakness for the country. Meanwhile, we got some movement in the trade war this morning. The EU is prepared to accept a flat 10% U.S. tariff with conditions, Handelsblatt reported. Gotta love the name of these German media outlets, the Handelsblatt. It's just rolls right off the tongue, doesn't it? Brussels negotiators hope that offering to accept U.S. tariffs of 10% across the board. Let me restart that. Brussels negotiators hope that offering to accept U.S. tariffs of 10% across all of the European Union's exports into the United States will avert any higher duties on cars, drugs, electronics, newspaper Handelsblatt reported on Monday. Citing high-ranking EU negotiators, the paper said to offer the U.S. counterparts would come only under certain conditions and would not be billed as permanent. Handelsblatt also said the EU was in return ready to cut its tariffs on U.S.-made vehicles and to possibly change technical or legal hurdles to make it easier for U.S. manufacturers to sell their cars in Europe. And the EU has also offered to completely ban purchases of Russian gas, potentially creating more demand for U.S. producers. So the EU is saying, hey, U.S., lower your tariffs to 10% on our goods, and in exchange, we'll lower our tariffs on your cars. We'll lower our tariffs on your big tech products. We'll also stop buying Russian gas. We'll buy more from you. U.S. negotiators, however, have so far not agreed to limit their import duties on EU cars to 10%, the paper added. So we still don't know how the U.S. feels about this deal, but at the very least, they're still talking. Meanwhile, drone maker Aero jumps 140% in the latest post-IPO debut pop. We've seen a couple of these recently, guys. The market has been starved of IPOs this year. There's only been a few, but the few that there have been have rallied like crazy upon initial offering. Aero Group Holdings shares climbed 140% in their public trading debut on Friday after the company raised $60 million in an IPO, becoming the third company this month to more than double during its opening session. Let's see. Having already met with investors in April, the offering was already well oversubscribed late Wednesday when Aero decided to reprise its plans to go public, enabling the deal to proceed after only a one-day roadshow and despite Thursday night's attack by Israel on Iran unsettling markets. So this is kind of interesting, guys. This company was gonna IPO and they had kind of put their idea, they put it on the shelf, they had paused it, they were delaying it. And then all of a sudden Wednesday, on very little notice, they do a one-day roadshow and they say, you know what, screw it, we're taking the company public tomorrow. And within 24 hours, war breaks out between Israel and Iran, heavily involving drones. It's almost like somebody knew. Isn't that interesting how that works? With Iran and Israel, we always hope for a peaceful result, but that also feeds into the demand because there's a lot more appetite for aerospace and defense investments, the company said. The debut surge, which pushed Aero's market cap to about $1 billion at the highs, also came just 2 days after shares of space and defense firm Voyager Technologies ended their debut session up 82% after more than doubling at one point during early trading. Circle's 168% first-day gain on June 5th following its IPO also demonstrated investors' rekindled enthusiasm for first-time share sales. I tell you, people just cannot get enough of IPOs lately. Check out Aero Group Holdings. After rallying more than 100% yesterday, they're up another 45% this morning, trading at $34.88. Let's refresh that, make sure it's accurate. Oh, no, excuse me, $36. It's up 50%, 51.5% and rising. You get the picture here, guys. These things are going vertical after their IPOs. Look, I don't really know much about this company at all other than that they make drones and they have a very well-timed IPO. Meanwhile, Google, Scale AI's largest customer, plans to split after Meta's deal, sources say. It looks like Scale AI getting into bed with Facebook is costing them their business with Google, but the two companies are probably still going to be friends. They're just going to see other companies. Alphabet's Google, the largest customer of Scale AI, plans to cut ties with Scale after news broke that rival Meta is taking a 49% stake in the AI data labeling startup. 5 sources familiar with the matter told Reuters. Google had planned to pay Scale AI about $200 million this year for the human-labeled training data that is crucial for developing technology, including the sophisticated AI models that power Gemini, its ChatGPT competitor. The search giant already held conversations with several of Scale AI's rivals this week as it seeks to shift away much of that workload. Scale AI raked in $870 million in revenue in 2024. Google spent some $150 million on Scale AI services last year. Other major tech companies that are customers of Scale's, including Microsoft, are also backing away. Elon Musk's XAI is also looking to exit, one of the sources said. OpenAI decided to pull back from Scale several months ago, according to sources familiar with the matter, though it spends far less money than Google. OpenAI's CFO said on Friday that the company will continue to work with Scale as one of its many data vendors. Companies that compete with Meta in developing cutting-edge AI models are concerned that doing business with Scale would expose their research priorities and roadmap to a rival, 5 sources said. By contracting with Scale AI, customers often share proprietary data as well as prototype products for which Scale's workers are providing data labeling services. With Meta now taking a 49% stake, AI companies are concerned that one of their chief rivals could gain knowledge about their business strategy and technical blueprints. So Scale raised a whole bunch of money selling that stake to Meta, but it's costing them a whole bunch of business. They're losing Google. They're probably going to lose Microsoft and XAI as well. So we'll see how that works out for them in the long run. Last but not least today, got to talk about this one. Trump Organization announces a mobile plan and a $499 smartphone. All right. I know very little about this thing. I am not rushing out to stand in line to buy a Trump phone, but this is going on this morning. The Trump Organization on Monday unveiled a phone plan and a $499 smartphone that is set to launch in September. The new service, Trump Mobile, offers a $47.45 per month plan that includes unlimited talk, text, and data, as well as roadside assistance and telehealth and pharmacy benefits, according to its websites. The company owned by President Donald Trump also announced it will sell a T1 smartphone, which appears to feature a gold-colored metal case etched with an American flag. You know what this doesn't say? I'll tell you what this article doesn't say. It doesn't say if the Trump phone is going to be manufactured in the United States. It doesn't say if the parts are going to be made in the U.S. or if it's going to be assembled in the U.S. And look, you are putting whatever, like 400% tariffs on phones or 145%, whatever it is this week. It's probably going down or up or down or up. And whatever the tariffs are, you're claiming you want Apple to build their phones in the U.S. You want Google to build Androids in the U.S. or Samsung to move their chip fabs to the U.S. You want Taiwan Semi to build their manufacturing in the U.S. So where are the Trump phones going to be built? They don't mention that in this article. They mentioned the gold-cased American flag-etched phone, but I don't care if that gold-faced American flag-etched phone is etched in China, then I don't want anything to do with it. So, hey, Donald, Mr. Orange, good chance here to walk the walk as well as talking the big game here. I won't be holding my breath, though. Something tells me these phones will not be manufactured in the United States, much like every other phone in the world is not manufactured in the United States. And I just want to say thank you very much to T.A. Chapman. Thank you, T.A., for supporting the channel. He says, amazing video yesterday with Travis. Missed your videos with him and Melody. Go silver. Have you looked at Chinese buying difference recently, gold and silver? I have not looked at that Shanghai arbitrage in a couple of days. The last I checked, it was still trading a few dollars above what it's going for in the U.S. So that west to east metal drain was still happening in China. Foreign central banks still buying up gold. Honestly, I think less important than the silver Shanghai arbitrage is what do the central banks do with their gold purchases. That's the reason why gold is rocketing so much right now is central banks are buying huge amounts of it. That's dragging gold higher. And as gold goes higher, it stretches that gold to silver ratio. That gold to silver ratio puts upward pressure on silver's price as well. So I think that's the biggest story there to watch with gold or silver. That being said, I really like silver here, guys. When I see a gold to silver ratio in the mid to high 90s, that tells me silver is a coiled spring and ready to pop here. So I bought a little bit of silver recently last week as well. I got some silver eagles because the premiums are nice and low right now. That being said, thank you very much for the kind words about my work with Travis and Melody. I still do videos with these guys. It's just the DNN live stream schedule was just killing me, guys. DNN got put by the wayside right around the same time I stopped doing the Friday afternoon live stream because I just wasn't getting any videos or any interviews or anything done. I was just constantly prepping for the next live stream, and it didn't leave time for anything else. So I appreciate the kind words. But thank you very much. By the way, that video is on Real Estate Mindset. I did a video with Travis last week. It just ran yesterday about private markets. My buddy Travis calls me up, as he often does, and he says, Jack, what do you think is the single biggest risk in markets right now? And I had to think about that because there's a lot. There's a lot going on. You got geopolitical tensions. You got the trade war and tariffs. You got liquidity problems always lingering on the horizon in the bond market. You got a bubble in AI. You got commercial real estate, right? No shortage of problems, rising delinquencies. But the more I thought about it, the biggest risk to the average person's retirement account is what I was worried about. And in that regard, I think private markets, private credit, and private equity, that is the biggest risk, because I see this massive movement on Wall Street to democratize access to alternative assets. In other words, park this garbage in your 401k and your IRA before the prices goes to hell in a handbasket. And so that's what I tailored that presentation to with Travis. So shout out to my buddy Travis over at Real Estate Mindset. Check out that video when you get a chance. Thanks again, T.A. Chapman, for supporting the channel. And thank you for gifting 10 Nobody Special Finance memberships. Appreciate that very much, T.A. Guys, don't forget to say thank you to T.A. if you got one of those memberships. And welcome to the Melonheads. Charles G. says, speaking of healthcare, from yesterday's Zoom call, I spent $7,000 on my cat for a vet to unblock a crystal urinary block. Yikes. That hard water strikes again. Why TF does that cost so much? Look, that's one of the things that I noticed in the first half of this decade. Spending on pets went through the roof. That's a trend that's been ongoing for about the last 20 years, but it has reversed since 2023. People are starting to spend less on their pets. We're seeing things like bottom shelf pet food is selling more than the Purina or the higher level brands. As far as why it costs so much, I mean, there's any number of reasons for that. But they know you'll pay it because the pet is a member of your family. And when a member of your family is sick, you do whatever you can to save them. That's why. So there's even pet insurance out there. But by the way, be careful. Some of these pet insurance scams, I think they're financial frauds in the making. But thank you for the kind words about the healthcare discussion. Look, I criticize healthcare a lot on this channel. I criticize a lot of the companies, in particular Steward Healthcare, and the way they have just looted hospitals with their MPW, Medical Properties Trust, colleagues. That being said, my interaction with the healthcare system over the last few weeks was amazing. When my daughter fell and got hurt 2 weeks ago, it was really bad. The hospital we took her to, Children's Hospital of Philadelphia, they were freaking fantastic. Now, I haven't gotten the bill yet. I don't know if my daughter's broken arm is going to cost me an arm and a leg, but I can tell you that they were fantastic with how they took care of her. The waits weren't that bad. The staff was nice. They were friendly. Just, it could have been a whole hell of a lot worse. I am so glad I didn't end up at one of those Steward Healthcare hospitals. Let me just put it that way. Thank you, Charles, for supporting the channel, sir. Also, welcome, Frank, to the Melonhead, sir. We got a new member. Welcome, Frank. Just a reminder to all you Melonhead members, guys, that you get one free super chat every month with your membership. Feel free to use that, and I will read and respond to your questions on the air during the stream. Thanks again, and welcome, Frank. And there's my buddy Travis. Hey, brother, what's going on, Real Estate Mindset? He says, happy Monday, and thank you for another great morning report. It is my pleasure, brother. Once again, guys, check out that video I did with my buddy Travis over at Real Estate Mindset. You go directly to his channel, or if you go to the posts in my feed, I posted about that last night. Had a great time talking with you about private markets. Travis, thanks again for having me on, brother. And thank you, everybody, for having your coffee with the Melonheads this morning. I appreciate that very much. Don't forget that like button and that subscribe button on the way out for the algorithm. Thank you also to my magnanimous Melonheads on YouTube and Patreon. You guys rock. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.